All right. We're live. Good morning, everybody. I hope everybody's having a good start to the week and appreciate you starting it with us during this Spin Protocol live session. Today, we're joined by Andres Ricaurte, who is VP and head of B2B at American Express and a leader in global payments and financial services. We're really, really excited to have him join us here. In addition to his role with American Express, he's involved as an advisor with a number of early stage tech startups, including ours, and we're very glad to have him join us. And I think before we jump in to talk kind of about how cryptocurrencies and blockchain technology and distributed ledger technology are changing the kind of landscape for global payment processing and financial services, I want to put Andres on the spot a little bit and ask him to kind of tell our viewers, why did you decide to jump on board with Send, and what is it about our project that most excites you at this phase?
Well, thanks. First of all, thank you for having me. I'm very excited about the session this morning and overall about the journey with Send. I learned about Send not long ago, probably a couple months ago. I normally monitor the startup scene. I have a series of areas where I'm very excited about advising. And through some mutual acquaintances, I got to know Camilo, the founder of Send, and WeSend overall. And I was extremely impressed by, he as a person and his knowledge of the space and the understanding he has of the specific problem he's looking to solve, and B, of the technology. While it's an early stage company, the progress that you guys have accomplished in the last few months is just impressive. I think you're solving a very, very important problem, which we'll talk about a little bit later. I think it's a big problem for people all over the world. It's an honorable problem to solve, and I think that the approach from a business model standpoint, from a platform standpoint, the approach that you guys are taking is impressive and has a lot of potential. So I'm very, very excited that I've been asked by Camilo and the team to help out and advise wherever I can.
Cool. Yeah, we're really psyched to have you. And you alluded to this problem, and that's kind of where we're going to start this conversation is, what are some of the current points of friction in payments, in the payments industry today? And then we'll kind of move on to, the ways in which blockchain and distributed ledger technology can hopefully solve some of those. But based on your experience, and you have a lot in this industry, what are some of the biggest challenges and friction points there?
So I think we should start by remembering that the financial services industry as we know it, whether it's banking or clearinghouses or several other institutional models, were established several centuries ago, to say the least. So that comes with a certain amount of proven infrastructure, but at the same time, it comes with systems and processes that were optimized for how trade was happening back in the 1600s. So particularly in the world of payments, that means a large number of intermediaries, a large number of very specialized institutions that play a very specific role. And so to move money, for example, from one country to another, if I, as an individual, want to send money to a friend in Peru, it is likely that that money is going to touch 5 or 6 different hands. Each one of those 5 or 6 different hands is going to have an associated fee. And more importantly, above and beyond the fee and the cost, it's going to create lag and delays in the ability for me to put that money in the destination location. It's going to create lack of transparency. So I send money, I don't know where it is. Eventually, I have to wait for the recipient to call me and let me know that the money made it safely. And so if I take payments, just the payment slice of the financial services industry, the number of intermediaries just makes it very difficult for any innovation to actually happen on top of it, because it's so, I want to use the word clunky. It's been built, it's fit for purpose. It does what it's supposed to do. It just doesn't do it very efficiently or in a way that creates a model where other people can innovate on top of it. And if you start looking at other areas of the financial services industry, lending, for example, a similar model. I try to apply for a loan and it takes days, if not weeks, if not months, to get access to that loan. Or I try to collect money from somebody else, and it takes so many different steps. So I think all of these friction points need to be solved. I don't know that there is a silver bullet formula for all of them, but companies like WeSend and the Send currency are really taking great stabs at solving specific parts of those problems.
Awesome. Yeah, and I think we'll dive into kind of how these new technologies can come in to solve some of the clunkiness, as you say, in a bit. But I'm also wondering, how might cryptocurrencies more specifically impact payments moving forward, and just kind of overall commerce globally when we think about cryptocurrencies as a more universal form of payment, one that still at this point is not very widely adopted. There's still quite a ways to go, I think, before we get to that point. But what do you see there as kind of the future potential or the challenges and the role of cryptocurrencies in payments?
Sure. So my read of the cryptocurrencies or digital currencies world is there's been so much activity in the last few years that it's hard to keep up and hard to decipher what's noise and what's signal in this space. I believe that currencies that have a purpose. So if you think about back in the old days with bartering and taking specific commodities and using them for bartering, they had a specific purpose. So I think that currencies, digital currencies with a purpose, are going to go much further than digital currencies that are just out there to be cool. And as you think about how they're going to change the industry, I think having a way of transferring, storing, acquiring value, sharing value with a currency that is built for that purpose, with a currency and an ecosystem around it that is backing that particular purpose, makes it a very useful thing. I think the challenge that we've seen in the past is there's been a lot of hype around cryptocurrencies. And when you really drill into, okay, so what's this currency doing? You can't really understand what it's doing. I think every single currency that's been created and has been valuable has had a purpose. Now, as we think about how it'll change the payments landscape, I can imagine a world where there is no need. If what I'm trying to do is purchase something, that means money is going to come out of my bank account and eventually it's going to go into the bank account of whoever's selling me that thing. Whatever happens in the middle of that transaction, whether I use a digital wallet, whether I use any form of token to make a payment, and whether the recipient uses some form of digital identity to receive that payment, whatever happens in that part of the transaction doesn't have to be governed by regular currency and regular forms of payment. I think over time, there will still be bank accounts, there will still be traditional fiat currencies backing economies and backing overall wealth of different systems. But the transactional parts that happen between those systems, the transfer of value, I think that's the space where digital currencies are going to be extremely valuable, and they'll create an opportunity to really redefine what that experience looks like. They're going to allow providers that are not just financial services providers, but technology providers and identity providers and experience providers to reinvent the way in which those commerce experiences happen. I think, for example, about I'm going to quote the typical Uber. The concept of payments inside of Uber is almost invisible. When I'm standing in a corner of New York City at 1 a.m. and I'm looking for a cab, I'm not thinking, how am I going to pay for that cab? I'm looking at my phone, getting a car, and then all the payments processes are happening behind the scenes. So I think that digital currencies have the opportunity to create an infrastructure and create capabilities on top of which others can build really, really cool experiences. And it doesn't mean completely putting aside traditional currencies. I think there's going to be an intersection of the two.
Yeah, so that is very interesting. And I think I now can anticipate your answer to this next question that we have, but do you think that established financial service providers, banks, etc., view blockchain and cryptocurrencies as competition or as new business opportunities, or neither? And why do you think that?
So my personal view is if you separate traditional banks from other financial services players that are trying to innovate in this space, if you just take the traditional financial institutions, they are more than intrigued. I think we've gone over the hump of banks and financial services feeling like blockchain, distributed ledger, digital currencies are a fad. I think they all recognize, and in my interactions with many different financial institutions, they all recognize that there's something here. They're all either investing in private blockchains, they're investing in startups that are building out different types of solutions around distributed ledger or around cryptocurrencies. They all have projects in this space. Some of them much more public and much more advanced. Others are a little bit more labs, but they're all trying to figure out, how do we tap into this new way of doing things? To me, it's a little bit like what happened with the internet back in the 80s. Everybody was intrigued at some point. I mean, it started with people being like, no, I like to send letters by mail, and my writing is, that's how a letter is legitimate. That's how, the Bill of Rights was written. So it's never going to change. The truth is, technology became real, and everybody started to dabble in it. And then with the flip of the switch, everybody was on email. So I think a similar movement is happening. Banks are recognizing that the technology and the infrastructure and the business models that can be enabled through distributed ledger technologies and digital currencies are transformational, and that they will be here to last. But we're very, very early in the curve. So while there will be projects here and there, I think it'll take a couple of very strong winning solutions to move the market further forward. And it goes back to the point I was making earlier. These solutions need to have a purpose. They need to be solving and addressing a very specific customer pain point. Banks were built, I can speak for the US, but banks were built through acquisitions, for example, in the United States. So you have hundreds and hundreds of different systems, even within the same bank. Any given bank had probably bought 300 other banks along their way, and those 300 banks are running on 300 different systems. So being able to leverage digital technologies like distributed ledger to bring together all that infrastructure and create a seamless experience for their customers is definitely something that's going to happen. So bottom line, I think there's intrigue. There's probably more than intrigue. And banks are starting to invest in this technology to help shape how we can bring together the traditional regulated, the quote unquote typically trusted infrastructure with the new, more flexible, more innovative approaches, how to create a best of breed.
And along similar lines, we started talking more about kind of blockchain, then we moved into crypto, and how the banking industry and traditional financial services view these new startups and new technologies. But what is it that most excites you? I mean, a lot of people say that what excites them about distributed ledger technology and blockchain is this idea of it being completely decentralized. You don't have a central institution that you need to trust, and that is often one of the things that's cited as, this is why I buy into this technology. This is why I think this is the future. It sounds like you're saying, what's most exciting is these specific use cases and the ability to kind of complement the trusted systems we already have with new technologies that are more agile. What else is it that you identify in distributed ledger technology that makes you think this is the future and it's definitely not going away?
I mean, I think there's two threads here. As an infrastructure, to your earlier point, there's a very exciting opportunity to truly shape the way the trust systems are established and to create a completely decentralized or a democratized way of trusting any ecosystem without the need to place the trust on a single individual. But if I think about the use cases themselves, I think financial inclusion is a big category, whether you're talking about gaining access to financial solutions and services for people that are typically unreachable by banks, that can only be reachable digitally, or where the ways to verify their identity needs to change. So it's not about creating anonymity, quite the opposite. I think it's about finding new ways to identify the trading parties that are in an ecosystem and managing those identities in a way that doesn't put those individuals or the system at risk. which is very different from saying we need an anonymous system. I think the individuals in the system need to know that they're part of a trusted environment, but by finding other ways to onboard them onto the financial world through other means of identification, through other ways of engaging with them, whether it's mobile phones, whether it's digital assets, kiosks, etc., you can bring financial services and financial advantage to people that, for the most part, don't have access to it. That's one big category in my mind. The other one is overall the efficiency in transactions. So back to the conversation earlier about it taking 5 to 7 days to move money from Mexico to Venezuela or from Colombia to Peru, which is ridiculous, and the amount of cost associated in that process, and the whole idea of fire and forget, and then hope that the money made it there. The transparency that these new technologies bring to understand, because the control is no longer on a single ledger, but it's out there and it can be publicly or privately disclosed to many different individuals, knowing that the value, where exactly the value is at any point in time. Things like, for example, smart contracts. So in the commercial space, when a company's buying products and services from another company, the whole idea of sending a purchase order, receiving an invoice, getting some form of confirmation on paper, a bill of landing, etc. The ability to put all that on a blockchain and be able to track it digitally. And if you overlay things like smart devices and Internet of Things and connected world, so to speak, then you can start to really create efficiency in the way transactions happen. I mean, the fact that you still have specialized lawyers and bankers on each side of the ocean when a container is being shipped and when a container is arriving on the other end, just to confirm that things are where they are supposed to be. Being able to do that digitally creates a significant amount of efficiency. And then overall innovation. I'd say I've been exposed to projects in, energy sharing and households that are sharing excess energy and putting it back on the grid. And the way in which those transactions are all being tracked is through distributed ledger technology. So I do think there is an underlying element of creating better infrastructure and this decentralized model that allows us to innovate much differently, but specifically around use cases. I mean, financial inclusion is huge, overall efficiency in transactions, and then the concept of innovation and creating new opportunities.
Awesome. And what do you think it's going to take? So a question that a lot of us have, myself included, Francisco included, we've talked about this as a team, is, one of the challenges for cryptocurrencies specifically, but also, blockchain technology more generally, is it does at this point still kind of exist in a silo. And it's hard to find those points of connection with the real world and with existing institutions and with real world users. So what do you think it's going to take, using Send or WeSend as an example, even, for these technologies to become real world adopted and to connect with everyday users and for everyday uses?
That's a big question, but I appreciate it. I think, like with any new technology, the first real manifestation of value is it needs to solve a problem. Great technology for the sake of great technology is useless until someone figures out how to solve a problem. So the first big area of focus in my mind is ensuring that you are targeting a very particular business problem, a problem that people can relate to, a problem that people are willing to change their habits in order to address, something that is painful enough for people to say, yes, I'm willing to entertain something different from the way of doing things, because the way of doing things today is painful for me. As long as you can stay focused on building technology around a particular business problem, I think the next phases become a little easier. There is a certain element of word of mouth and massification that needs to happen, in my opinion, in my experience, through the community itself. So if a couple people start using a particular thing and they realize that it's great, they're going to talk to their neighbor and they're going to talk to their family, they're going to talk to their friends. And there's no better testimonial than customers who are using a particular technology saying, hey, you should give this a shot and you should give this a try. So the ability to build communities around that technology and to build an ecosystem of advocates that are seeing the value and are willing to go out of their way to share the value that they're experiencing and that they're getting out of this. And then there needs to be something in it for that community. The more the community grows, the better off everybody else is. So there is an element of viral community-based growth. And then the third element that I think is going to be really, really important is a series of targeted partnerships that can augment that particular technology. I do think it's going to happen in verticals, specific verticals. I think spaces like, for example, B2B trade that we were talking about earlier, spaces like smart homes and smart cars, spaces like remittances, very specific verticals where there is a big opportunity to solve a problem that customers can relate to on an everyday basis. If you can start, I think that's where the adoption is going to start to really grow. And then as that adoption grows, to the extent that we can build communities around that, to the extent that we can find and bring the right strategic partners to augment the volume and the traction of those technologies, that's what drives, in my mind, systematic growth of the ecosystem. I don't expect there to be a overnight explosive growth and now everybody in the world is using blockchain. But I do think that in very specific verticals, it's going to start growing extremely, extremely fast.
And Andres, in those verticals that you're talking about, what are the necessary partnerships or business to business relationship that needs to happen in order to combine the crypto world in that specific area with the customer needs? So, like, can you give us examples of what blockchain companies need to look for in order to build those relationships?
Sure. I think if we kind of relate back to the conversation about commerce and the fact that at the end of the day, at least for the foreseeable future, and this is my personal opinion, you will still have a relationship with a bank. You as a consumer, as a business, will still have a bank, and the people you're trying to send money to or the businesses you're trying to pay will also still have a bank in one way or another. At the end of the day, there needs to be a connection to that world. For the transactions to be efficient, you need a way to onboard a customer. You need a way to bring funds into the digital currency world. Then you can build as many experiences and as many unique products as you want for trading of value, for storage of value, for interactions between users. And then down the road, at some point, you need a way to get that money back out when you need to use it in a traditional environment. So I think partnerships that can help with the integration into the traditional world, into the traditional, in the case of payments, financial services world, companies that can help do the onboarding of customers, the offloading of money back into a fiat currency. If I were to equate this to a completely different vertical, but if I'm a manufacturer of smart cars, there could be a lot happening in the distributed ledger technology space, and there could be a digital currency used for, I don't know, paying tolls for smart vehicles. But there needs to be a partnership with the person that's actually building the kiosks that allow the license plate to be captured and the sensor to be detected so that the crypto can go do its thing and go create the exchange of value and go create its experience around billing and around reporting and around everything it would do. There does need to be a partnership with some physical device that can track and connect to the real world. So if I bring this back to financial services, to me, the most strategic partnerships in the financial services, digital currencies world are those that can help build branches back in to the traditional financial services rails. I think on top of that, with the right platform and the right kind of digital capabilities, once that becomes a grid, once you have ways to onboard customers, onboard money flows, and offboard them back in the destination country or the destination location, then you can start building a series of truly digital, extremely innovative, completely disruptive use cases and applications, because they'd be sitting on top of a regulated or established infrastructure on top of which you can do other things. I mean, if you think about another example to try to bring the point home, smart light bulbs. Smart light bulbs are a great invention, right? They're controlled through the internet. You can change the behavior of something that historically you would have thought, I mean, at best, it's an improvement on a candle. But for smart light bulbs to work, you need a way to plug them into the traditional voltage or current in your home. So the ability to plug into your 110 volts or 240 volt current, that becomes extremely important. So if we go back to financial services, I think partnerships around that space, Pacho, are going to be extremely helpful to drive growth, credibility, and create an ecosystem that is normalized so that we can continue to build on top of it.
So in that sense, we have the infrastructure, you have the applications, you have the legal side, you have the interconnected systems, and at the end, a helpful thing will be to establish those ecosystems. In order to establish those ecosystems, what are the key elements that companies need to consider to make it right? Because many people wanted to build ecosystems. Let's just take the example of Windows when they tried to build the apps ecosystem and they completely fail compared to Android and to Google. So what are the key elements that need to happen in order to really have a helpful ecosystem that will allow the infrastructure with the partners, with the other elements to really combine and drive through?
I mean, if I had that answer, trust me, I'd be somewhere else. But I have some perspectives. I think back to the purpose, being very acutely, maniacally focused and aware of the problem for your customer that the ecosystem is trying to solve. Ensuring that there is a group of partners around that ecosystem that have a shared vision and a shared objective of solving that particular problem. Being very, I'd say, honest about how open or closed that ecosystem needs to be. And you talked about Android. I could compare that to Apple, and they're both very successful ecosystem with varying degrees of openness. Right? They're both open to a certain extent, but they have varying degrees, and that was by design. I think of Amazon as an ecosystem as well, being very aware of how close or open that ecosystem needs to be, and then learning in my mind I think the biggest opportunity is learning how to manage the identity of the users within that ecosystem. If I think about Apple, my identity or elements of my identity which I sign up for with Apple, are then ported into all the different applications with a certain amount of controls. So the camera applications can get access to my location, and they can get access to perhaps my Google Cloud account where the photos are going to be dropped, or my iCloud where the photos are going to be dropped. But the phone applications, the Skype applications, might have access to my actual phone and my credit card. So being able to control what elements of the identity get disseminated where, but ensuring that there is consistency of that particular user throughout all the different stops in the ecosystem is the trickiest part. So when you talked about infrastructure and then applications, and then you had the legal element and the ecosystems, or the partner ecosystems on top of it, the piece that I think becomes extremely important is how do you govern and manage the identity of users throughout those different layers. That's, in my mind, the holy grail, being able to create a identity for a user or a machine or whatever's consuming the technologies, and finding a way for that user or machine to trust you with all elements of that identity, and trust that you will then disseminate and open up, or give them the power to determine what parts of their identity get opened up where, in order for the ecosystem to work.
Great. And so in that sense, trust management of identity. Can you give us some thoughts about the importance of GDPR, the new regulation of the European Union, especially for companies handling data? Do you think it's beneficial for the ecosystem, or it will just hinder innovation in that area?
I think the fact that I don't know that I can give you a very objective assessment specifically on GDPR alone.
Okay.
What I will tell you is the fact that authorities are looking into this space and that they're recognizing that innovation will happen no matter what, and that there needs to be a way for identity to be carefully protected and managed, and that there need to be controls, is a good thing for any industry. The way in which the execution takes place is what will be extremely telling with regards to whether this is truly governments coming forward and trying to help, or whether it is a step back in trying to contain the innovation. My belief is the former. I think that just like what's happening with regulation around digital currencies in the United States, for example, the intent is good. It's a matter of ensuring that the execution is effective, and it requires advocates like all of us on this call to influence the way in which that regulation evolves, because it won't be a static thing.
Nice. And okay, taking from the identity management to building the ecosystem, APIs have served to help to build that bridge between interconnected apps, and you said the importance of them. Do you see an evolution of how APIs might evolve in the next 5 years?
I do. I think that, I mean, if you think of APIs at their core basics, it's the transfer of data from one machine to another, right? And the permissioning elements for that transfer are still relatively linear. I still need to allow machine one to, and provide a permission to machine one to go access my data in machine two. And then I need to allow machine two to go access my data in machine three. And while APIs have created a common language for machines to interact, I think what's going to change and become much more prevalent is the decentralization of how those permissions are handled. So if I think of a platform model, like, for example, Airbnb, right? Airbnb has created a marketplace of buyers and sellers of apartment, or renters of apartments. And you could think that they've tackled and disrupted the hotel industry, and they've created a new open marketplace. The truth is, there's still a central element there. There's still a central entity called Airbnb, managing the permissions, managing who gets access to what inventory, managing who gets what APIs to do what. In a world where distributed ledger technology and applications become much more adopted, these centralized technology marketplaces could potentially evolve into a world where the users themselves are actually owners of the ecosystem. They're not just participants, but they own. It's more like a cooperative model where buyers and sellers are all coming together. And I think the way in which the APIs are going to change is predominantly in the way in which identity and permissioning is managed, so that multiple interactions can be happening and controlled without the need of a central authority defining who needs to have access to what. It's a fascinating space. I've seen so many companies out there trying to redefine the way in which, you know, not just APIs, but overall digital platforms operate and interconnect. What I've learned so far, and I'm a firm believer, is with the right use case and the right problem, technology will follow. I'm a little bit wary of technologies that are out there looking for a problem. I'd rather have problems looking for a technology. And this brings me back to why I was excited about working with you guys. I mean, outside of the technology and outside of the specific platform that you guys are developing to tackle the problem's big and the problem needs a solution. So back to your question on how API is going to change, I think that will all evolve and adapt as long as we can continue to find problems for customers that we're going to solve.
Thank you very much, Andres.
So one question before we start to wrap up, we're talking about solving pain points and problems for customers, for users. With every technology, there are new pain points that kind of are created by that progress. One example would be a loss of jobs, for example, as more processes are automated. What do you see as some of the potential pain points that will accompany more massive adoption of these technologies, and what can companies like Send do to try to control or prevent some of that? Or is it not really even in our interest or part of our responsibility to try to prevent that, as long as we're providing a solution that is objectively positive for our user base?
It's a great question, and it is funny how solving for certain areas creates challenges in other areas, and the interconnectedness of all these industries. I didn't know that one of the biggest impacts of self-driving cars is going to be in the number of, in theory, the number of transplants and donations, organ donations there will be, because one of the biggest feeders into organ donation are people that were in car accidents. So the more you reduce car accidents, the less organs you'll be able to have available for donation. So it is indeed an extremely difficult situation. My belief is that some of these problems would arise no matter what. So trying to control the problems that are bigger than the cause are probably, as long as you can be aware of the ramifications of what you're doing and mindful of the social and economic responsibility that you have by creating a technology, some of these problems are going to happen no matter what, whether we build this technology or another technology. That being said, I think there are some areas that the industry and companies like WeSend can focus on to minimize those problems. I think that in the past there have been, and if I think about the digital currency space, the crypto space, there have been known problems. I mean, you can look at some of the currencies that pride themselves on the anonymity factor. That lends itself automatically to problems that might have been happening already, but get accentuated because you're promoting a model of, for example, anonymity. So my advice, or my big call to companies like you guys, is to make sure that every single step of the way is extremely well thought out, to make sure that there is a very strong focus on controls, on compliance, on not taking any shortcuts, on ensuring that your customer's identity is protected and safeguarded like nothing else matters, to ensuring that there is transparency, that for the sake of acquiring a few new users, you don't change or hide the terms and conditions of a certain transaction. Being very legit with yourselves and with your customers. Those are the problems that I think you can control. Those are the problems that I encourage every startup that I work with to focus on controlling. Some of the bigger impacts I think would be happening anyway. Some of them are going to lead to other solutions that are, for example, back to the transplant donation. A shortage in transplant donations is going to lead to an increased focus in genetics and artificial development of different technologies for medicine. So it's all an interconnected environment, and trying to solve for those bigger things is only distracting. But solving for the day-to-day areas where you need to ensure you're delivering consistent, reliable, trusted, efficient processes to your customers, that's 100% within your control.
Mm-hmm. Nice, Sarah.
Take the microphone off mute, so I was going to let them jump in. I agree, and I think that's something that we have been very focused on and driven by from the start. Is, as you mentioned at the very beginning, identifying a problem and setting out to solve that problem, not creating a problem in order to jump in with a solution. And that problem is one that exists within a very specific community of users who are experiencing the same pain point, and trying to keep the focus on our customer base is something that we have been doing since the start. So it's reassuring to hear you say that. We want to thank you so much, Andres, for your time this morning, and Francisco, thanks for tuning in from London. I jumped past it at the beginning, but for those of you who are watching, Francisco Cordova, our co-founder, will be in London. So if you're local, definitely feel free to reach out, and we would love to connect in person. He'll be speaking at a meetup on Tuesday evening at 7 p.m. We'll be posting about that on our channel. So again, if you're in London, it'd be great for Francisco to connect. And Andres Ricaurte, thank you so much for joining us. We're really happy to have you on board, happy to have you as a partner here. And we look forward to continued conversations in the weeks to come.
Thank you so much for having me. I look forward to seeing the tremendous trajectory capitalize. I think that both of you guys, Pacho and Camilo, and the rest of the team, just know the space and you know what you're doing. So I'm very excited to see you along this journey, and I'm looking forward to looking back a few months from now and realizing how far you've continued to go.
Awesome.
Thanks Andres, for your support. Thanks, Sarah. Have a nice day, guys.
Well, take care. Bye.
Bye.